This episode is sponsored by Ground News. Judge the truth for yourself. Ground News is the world's first news comparison platform. It will let you see how various media have processed information and alert you to their political point of view. This allows you to have a better awareness of what you're reading via a political spectrum tool. See the news that you're not seeing. Ground News's geographic filters let you search everything from hyperlocal news to global events. And with all the news stories breaking about current events these days, you will be able to find accurate statistics and reliable facts. News changes quickly, and cycles are shorter than ever. But at Ground News, you can keep track of all the threads concerning your topics of interest, refresh your memory on stories, or just observe the way news spirals out. You can also audit your own news. Yeah, that's right. They give you a simple view of who has covered a story and where each outlet falls on the political spectrum. You can get the Ground News app for free in both the Apple App Store and the Google Play Store. Click the link in the description below and get Ground News for free. Now, let's get into today's video. Many people believe that buying things on AliExpress is like giving money to the Chinese Communist Party. Reading some media coverage, you get the impression that there is a direct relationship between Xi Jinping and Chinese companies, right? Well, that's not the case. Listen up.
China halts $37 billion Ant Group IPO, citing major issues. FT.
In case you don't know, Ant Group is a financial services company that is part of the Alibaba group. And yes, Alibaba is the parent company of AliExpress. We're talking about one of the biggest and most well-known companies in all of China. It is not only a technology company that competes hand in hand with the big giants of Silicon Valley, it is one of the Chinese companies that has gained the most market share abroad. However, the Chinese authorities are putting all kinds of obstacles in the way of Ant Group's IPO. There were even rumours about the alleged disappearance of its founder, Jack Ma. He disappeared from the public eye for several months after giving a highly controversial speech in Shanghai. In that speech, he harshly criticised Chinese banks. But relax, Jack Ma has since reappeared and is safe and sound. Nevertheless, the Chinese government is still holding back the IPO of his company, Ant Financial. So the questions that come up are, what is China's problem with its biggest tech company? Why is the Chinese government making such a big deal about Ant Financial going public? Is it the Chinese Communist Party supposed to take care of its entrepreneurs so that they can lead the world? Today, we're going to answer these questions, but first, let's take a look at a bit of history.
Financial institutions no longer win all the time.
In the last 25 years, the Chinese economy has multiplied its size by precisely 25 times, an absolute spectacular growth record. And of course, given this data, you may even forget the most basic fact. No matter how many skyscrapers, neon lights, and 5G antennas they have, China is still a communist country. Well, more of a kind of hybrid where they even maintain 5-year plans, and where the main banks in China belong to the state. Yes, it's true, there are private banks, but they are very small. More than half of Chinese finance is in the hands of the big state-owned banks. In reality, this translates into one thing. The party bureaucrats are the ones who ultimately decide who can get a loan. The priority of these banks is not to lend to households or small businesses, but to state-owned enterprises. Add to all this the fact that Chinese banking regulations are much stricter than those in Europe or the United States. In other words, if you're a small business, it is almost impossible to get a bank to lend you money. To give you an idea, less than 1/5 of all Chinese companies are backed by banks. By comparison, in countries like Germany or Spain, 1 in 3 companies borrow from banks. And that explains the criticism from Jack Ma that has hurt Chinese banks so much. Check it out.
思想要依靠信用体系的发展。今天的银行延续的还是当铺思想，抵押和担保就是当铺，这在当年是很先进，没有抵押。
And you may be wondering, if banks don't lend money, how do regular Chinese people get loans? How do they set up small businesses in this country? Well, through small money lenders who charge very high interest rates. Many Chinese have been sunk by unpayable debts, and so it was until Ant Financial came along.
Ant Financial is a global technology company. It was founded on Alipay, established in China as an escrow service to build trust between online buyers and sellers. Since its first transaction, Alipay has grown to be the world's largest digital payment platform and has now evolved from a digital wallet to a lifestyle enabler.
And I know what you're thinking. Let me see if I've got this straight. Ant Financial, Alipay, digital payment platforms? What is all this? A new bank? Well, it's a company belonging to the Alibaba Group. But isn't Alibaba dedicated to e-commerce? What are they doing, giving loans? Well, we are going to look at that right now.
Jack Ma's Bank.
Alibaba was founded in 1999. At first, it was a portal that connected small Chinese manufacturers with foreign companies that wanted to buy wholesale production from them. Then they moved on to selling to end consumers, first in the Chinese market with Tmall and Taobao, and finally to the whole world with AliExpress. As of today, Alibaba handles 60% of China's e-commerce, and they dominate nearly a third of global e-commerce. Alibaba is known around the world for e-commerce, but in China, it goes even further. In 2004, they launched their own payment platform, Alipay. From there, they went on to provide other financial services, loans to small and medium-sized enterprises, loans to individuals. And this is how a new company was born within the Alibaba Group, Ant Financial. And this is where the problems start for Alibaba, because it begins to offer services that were traditionally offered by banks. This is something that we've already covered on VisualPolitik when we talked about financial technology services, or FinTech. In the past, banks managed the entire relationship with money. Now, they don't. Now, there are companies like TransferWise, DEGIRO, or Revolut, a phenomenon that is happening in China, in Europe, and all over the world. But there are some areas where Ant is being revolutionary. One is their Yuebao app.
Upon opening Alipay on the Yuebao landing page, users can choose from a series of money market funds. You can adjust your settings so that all the funds from your Alipay account will be drawn from and deposited directly into Yuebao. And you can also elect to have a certain proportion of your salary transferred automatically each month.
Yuebao is a money market fund. Money market funds are a little known financial instrument. The way it works is this. You put money in Yuebao, and that money is invested to give small loans to other people. You get a higher interest rate than if you put your money in a regular term deposit, plus you can take it out whenever you want. And here comes the super advantage. There is no minimum amount. Technically, you can just invest 1 yuan, which would be the equivalent of around 15 cents. And thanks to this feature, this fund has become a real bomb in China. Take a look.
Alibaba's Yuebao becomes world's largest money market fund, CGTN.
Yuebao came to be managing up to $270 billion. In other words, Ant Group is a true financial revolution, and that is why this company's IPO was going to be the biggest in history. That's right, it was expected that they would sell shares for a total of $37 billion. To give you an idea, the IPO of Aramco, the Saudi Arabian oil company, resulted in share sales of only $29 billion. But months before the company went public, Chinese financial regulators put the brakes on the IPO. Why? Well, we're about to find out.
Ideological reasons.
In addition to Yuebao, Ant has continued to explore the possibilities of fintech, wealth management, SME lending, and all kinds of services. This is creating a gaping hole for China's banks. Studies claim that financial technology firms will have eaten up more than 40% of China's potential card fees in less than 5 years, resulting in an annual loss of around $60 billion for banks. And not only that, this displacement of users from state-owned banks to fintech entities such as Ant Group means that banking in China would be privatized. With all that, this implies for the Communist Party in terms of loss of control over the Chinese economy. Because to control banking is to control the economy. So the reaction of the Chinese authorities has been very forceful.
China's President Xi Jinping personally scuttled Jack Ma's Ant IPO. Wall Street Journal.
But wait a moment, because this is not the only reason. We are not only talking about ideology, but also about a political game. Listen up.
Political reasons.
Who is the biggest beneficiary of a successful IPO? Well, those who already had part ownership in the company. In other words, those who own Ant Financial shares expect the share price to rise the moment they enter the stock market. And who are among the biggest?
Investment companies linked to the grandson of former President Jiang Zemin and the son-in-law of former Politburo Standing Committee member Jiang Qinglin stood to profit from the IPO. The Hindu.
You see, one of the first decisions that Xi Jinping made as soon as he became president of China was to clean the party of corruption. In other words, to throw out all his political enemies. This is how he ended up taking total control of the party. Well, many of these former party colleagues have tried their luck in the corporate world. If this IPO were to take place, not only would they become millionaires, but they would also have ownership of what would become the largest financial institution in the country. That explains why it was as recently as 2020 that China took measures like this.
Beijing launches antitrust investigation into Alibaba. Financial Times.
It is curious that they start this investigation right in the year 2020. 6 years ago, one could justifiably argue that Alibaba was a monopoly. Back then, this company accounted for 81% of all e-commerce turnover in China. Today, however, its market share has fallen to 55%. But hold on a minute, because we're not just talking about politics or ideology, there is actually an economic and quite legitimate reason for wanting to put some control on Ant Financial, and we're going to look at this right now.
Economic policy reasons.
We could say that Ant Financial is a bank that has no money. They just act as an intermediary. You ask for a loan at Ant Financial, and they connect you with small lenders or directly with banks. Ant Financial is currently required by law to fund only 2% of each loan. And here comes the big question. What happens if the debt isn't paid back? The problem would not be with the intermediary, but with the one who lends you the money. In other words, Ant Financial has little incentive to make sure that its clients are solvent. On the contrary, their goal is to create as many loans as possible. And what is the problem with all this? Well, it could easily trigger a lending bubble. A bubble very similar to the subprime mortgage crisis. In other words, Ant Financial might be willing to lend money to someone who is not creditworthy. Then, it may bundle good debt and bad debt into packages. These packages are then sold to banks or investors.
The phones say a lot of their customers are freaked out, waiting to see how low the Dow.
NASDAQ, everything and more has been completely wiped out.
The Dow traders are standing there watching in amazement, and I don't blame them.
Well, to avoid this, China has proposed this measure.
China tightens online lending rules in fresh blow to Jack Ma's Ant Group. Financial Times.
In short, what the regulators are asking Ant Financial to do is put up 30% of the money it lends out of its own pocket. This way, the company has a strong motivation to make sure that all of its customers are creditworthy. And yes, 30% is a really high number. To put it in context, banks in the Eurozone are only required to have a 1% reserve. In other words, with these new regulations, Ant Financial will be forced to become much more conservative with its lending, almost as much as the traditional Chinese banks. Of course, with measures like this, they could also avoid a crisis like the Great Recession of 2008. But on the other hand, they are preventing thousands of small businesses from being able to finance themselves. So now the question is, do you think that China's putting the brakes on Alibaba's financial arm is motivated by economics? Or is it just a strategy for the Chinese Communist Party to maintain its control over the economy? You can leave your answers in the comments below. And as always, don't forget that here at VisualPolitik, we have new videos every week. So don't forget to subscribe and hit the little bell so you don't miss any of our updates. All the best, see you soon.
And if you want to learn more about politics and hear even more of my lovely voice, you can join us at Reconsider Media. We have a podcast at reconsidermedia.com/podcast. See you there.